Good evening, this is Duane Lowry for the DPP Grain Desk on Sunday, August 5th. It's about 1:30 in the afternoon. Calls tonight I think are going to be lower. We're going to first talk about weather. Weather over the weekend produced better than expected coverage and precip totals across the Midwest. The areas that benefited more than what was expected probably was the state of Iowa. Part of central Illinois may have been a little bit disappointing. If you look at a 2-week map over the U.S., most areas have received some type of stabilizing or beneficial rains, with the exception being a couple of strips across the center part of Illinois. And I think that the weekend precip getting better rains for the state of Iowa is probably enough to be seen as a negative input here tonight. I think the other negative aspect of weather is going to be a much cooler temperature theme through the next 2 weeks. And if you coupled with a little bit of moisture and the cooler temps, I think you're going to find stabilizing type ideas. Some areas are certainly going to see improved potential or realizing their potential, at least in the case of soybeans. People will argue about how much benefit corn gets from moisture here on out, but I think in terms of filling the ear, I think there's definite benefit. The cooler temps should definitely be better, try to slow the crop along here. So I think the weather is definitely going to take a somewhat of a bearish stance. I think it's also important to point out that over the last couple of weeks, day-to-day weather storylines, forecasts really have had minimal impact on day-to-day price action. Very difficult to attach weather forecasts to intraday price swings. There's been a lot of bizarre price action both up and down on a given day. A lot of volatility, certainly a distribution type characteristic to the price action we've seen over the last couple of weeks. And on Friday we had a strong up day, helped partially by outside markets, helped by bullish weather spins on ideas that weekend precip would be minimal in the areas of the West like Iowa. That proved not to be the case, but that was part of the reason we were up on Friday. Technical conditions were poised for strength Friday. Even going back a week or two, they were poised to have a test of the recent highs in some of these markets. They were poised to have a probe of the highs in corn. We did end up jabbing to new highs in corn last week. Wheat had a nice short covering event on Friday. Wheat and beans both have tested the upper part of their recent trading ranges. But I don't think there's anything more here other than a test. If you look at the fundamental news of the marketplace here for 2 or 3 weeks here have basically churned around in a trading range type of environment. These price levels we're at now were first seen a couple of weeks ago, and we've been unable to build new upward momentum despite just a constant release of bullish production estimates that capped off with Informa on Friday, dropping the national corn yield to 120 point something, 120.4 I think it was. So, you've thrown an awful lot of bullish stuff at the market. We've had scatterings of rains over the last couple of weeks to try to stabilize different areas at different times. Some beneficial rains. Certainly there's going to be some benefit to soybeans out of it at a minimum. A lot of producers have been quietly talking about optimism towards their soybean potential if they could just get some rains here in August. I think there's also a chance that the fear-based, pessimistic rhetoric in corn may have reached a point where maybe we've overestimated the losses in this corn. Where time will tell. But the bottom line is, Friday we got a USDA report coming out with their August production estimate. It's going to be very difficult for USDA to deliver a number as bullish as what the trade has already seen from private estimates. And I think that the price action during the last couple of weeks has been very questionable at best and distribution in nature. And I think that we are dealing with a situation that these weekend rains that we had and the cooler temperature forecast that we have over the next 2 weeks, that might be just what it takes to trigger the next liquidation phase. Technical conditions warn that if we begin to tip over here, the break could be pretty severe. The low that we had a couple of weeks ago is certainly capable of being violated. On that particular break, corn broke about 60 cents. Beans broke, I think, more than $1.50. Wheat broke about a dollar. And I think those lows are vulnerable to be taken out here if we develop another liquidation break. And that's what the technicals warn against. And I think the fundamentals appear to be fully discounted and saturated here. So we can make an argument that prices need to stay higher to ration demand and all these kind of things. But at the end of the day, what we really trade here is money. And if the money decides it's time to liquidate, it's time to protect profits, being concerned about this USDA report on Friday, being concerned about price action, maybe it's because of weekend moisture, maybe it's because of the cooler temperatures, doesn't really matter. If the money decides they wants to leave and wants to protect itself, they can still remain bullish with the idea that we're going to get out now, we're going to sell it now, in anticipation they'll be able to buy it cheaper at a later date. So to some extent this becomes a self-fulfilling prophecy if the market begins to tip over, but I think that's the risk here. I think you've also got a share of producers out here that maybe their crops haven't been hurt as bad, or maybe they have been hurt, but they're trying to see if they can't maximize their insurance payment, and they like the returns that they get with $8 corn futures, and they're fearful of some sort of a unexpected reason for corn to break $1, and they don't want to have that happen at the same time that their crop insurance payout is being determined. So I think you've got another sector of the trade that is looking to sell this, even though they may have been hurt on the production. They're trying to protect their revenue from their crop insurance payout. Just an awful lot of things here that make me feel that the upside momentum here is going to wane, and it's going to probably tip over, and we're going to create that liquidation break. So respect downside potential here. You can remain bullish if you want. You can think prices have to go higher, but for right now it looks like you're going to experience some price weakness first. For the DPP Grain Desk, this has been Duane Lowry. Thank you.